right. Good afternoon, everyone, and welcome. So, XRP Ledger is currently in a period of incredible innovation. In just last few years, we've seen a surge of new DeFi primitives on the blockchain. Things like automated market makers, DIDs, and the upcoming lending protocol, tokens, smart escrows, clawbacks. The list is endless. And at the same time, academic institutions are focusing their research firepower on the unique architecture of the XRP Ledger. And this year, we had both industry and academic experts from the UBRI initiative exchanging ideas, sharing thoughts. And so the critical question and the theme for today is, how do we connect this rigorous academic theory with real-world practice to build more robust and efficient future of DeFi? And so over the next 30 minutes, we'll explore exactly that. We'll discuss the opportunities, the challenges, and the playbook for bridging the gap between academia and industry. My name is Vito Tumas. I'm a researcher at Ripple, and it is my privilege today to guide our conversation. And we are very fortunate to have with us two leading minds in this topic with us today. So please join me in welcoming Will Cong, the Rudd Family Professor of Management and Finance, Director of FinTech Initiative at the Cornell University, and the Senior Economist at Chairlink Labs, as well as Walter Hernandez, a researcher at the UCL Center of Blockchain Technologies, the UK CBT, and Exponential Science. So, William, Walter, a very warm welcome to you. And, well, let's start with the basics. Let's start with some introductions.
Sure. Well, thank you. Thanks for the intro, Vito. Very quick about myself. I sort of wear three hats. I'm an academic at Cornell University, working on the economics of decentralization, designs of tokenomics, as well as sort of blockchain forensics, cybersecurity related items. At the same time, I've worked with a couple companies, including Definity, Chainlink, Ava Labs, also co-authoring with chief economist at Circle. So luckily, I got some exposure to the industry side. And finally, I've been helping some of the regulatory bodies, including the SEC, the Department of Justice, Department of Treasury, New York State Department, concerning regulation and just understanding the industry better. So I'm happy to speak from all these aspects.
Thank you.
And from my perspective, just to give a quick background, some of my research has been particularly on DeFi, but not only limited from economics perspective or financial, but also from a computer science perspective, more on the programming side, and so many interesting things that in this field we have, that they collide together, from economics, finance, computer science, that it opens a lot of doors for research opportunities. So as my role in the UCL Center for Blockchain Technologies, UK CBT, and also Exponential Science, we look into the research that not only can remain in academia, but also we can bring it into industry to develop some products that can benefit the community.
All right. Well, let's dive in. So the theme of this panel is bridging the gap between research and practical application. So I'll ask you both the same question. So from your unique perspectives, what are the most significant challenges in bridging the gap between academic research and industry? And it's a two-parter. And so the second part is going to be related to that. What do you think is the perception of perhaps a little bit slower, more rigorous, more methodical approach of academia in the fast-paced crypto industry? William.
That's a great question, and that's something I think either from the academic side or from the industry side, people have been grappling with. I'm going to sort of answer the two questions at the same time. I think they all boils down to what are the gaps? So I think there are gaps along several dimensions. The first one is related to what is technically feasible versus what is the economic reality. Right? We look at decentralized autonomous organizations, for example. We do know DAOs are supposed to enable decentralized governance, and technically it is doable. But does that emerge as an equilibrium outcome in the markets, in the society? Based on the data we have collected so far, that's not what we observe. So there's a gap between the two. And I think the second dimension would be, which is something you hinted at, speed versus rigor. At Chainlink, even during my earlier work with Definity, I think it's clear that in the industry we need to roll out products, right? The next version 0.0, 0.1, 0.2, almost every week. So that definitely requires good intuition, fast execution, so on and so forth. The economic approach to these questions sometimes are a bit more, as you nicely put it, a little bit more, spread out, more careful. I think there's got to be a good balance between the two. And because of this trade-off between rigor and speed, sometimes we do run into issues if we just aim for speed. One example I can give you is when mining pools were emerging, I think a very quick reaction from the industry is that they are going to lead to centralization, over-concentration of mining power. Another example would be proof of stake. People might say, well, then the richer are going to get even richer, right? But these, if you carefully study the math and the economics, may not be the economic outcome. The evolution of shares in the staking economy would be, at least some studies have shown, to be a martingale, a random walk. So it's not that we get over concentration. And for mining pools, what happens is if you've taken Finance 101, we do know there are benefits to diversification. So if you are a miner trying to contribute computing power to the pools, you don't put all your eggs in the same basket. You don't put all your hash power into one pool. And if you study industrial organization, you do realize larger firms, and in our case, that will be larger pools, they have greater market power, so they charge higher fees. In terms of percentage growth, they actually grow less. So all these economic forces would help ensure there's decentralization, at least at the consensus layer, right, for mining. That would be a good example of the type of quick intuition versus more careful analysis. And finally, a point I don't have to elaborate too much is academic research tend to be more neutral. I'm not judging whether it's good or bad, but the incentives are definitely different. So it makes sense to develop a more comprehensive perspective, drawing information and insights from both academic research and industry research, product development, even regulatory debates. So that's sort of my take on this.
I will add into that, yes, I agree with Will. It's definitely a question of incentives. People in academia respond to different type of incentives that you will respond if you are with more commercial purposes. So in academia, your incentives are more, will lead you into a path where, for example, you start with a research topic that might branch out so much that end up becoming a completely different topic than the one that you initially started. While in industry, when you're doing a commercial project, You might have a very narrow, well-defined type of thing that you want to develop. Although if you are in a startup, of course, you might end up pivoting depending how the market is reacting to you, and you have to respond quickly. So that's one thing. So the incentives that you have in academia versus industry. And as well, I would say that given those incentives, the timeline for you to develop things might make you, for example, in academia, to be a bit slower when you compare with industry, because you have to be very rigorous, and since you don't know the findings that you end up having, because you start with a general research topic question, and while in industry, you know you need to move fast in order that you can serve to your customers. And then even if they don't respond to that, you need to change quickly. So I guess if we want to bridge this gap, it's finding this nice balance between the freedom that you have to research a topic, but in a way that you can develop and find the solution quickly, that it can be commercially viable.
Going a little bit off script, to extend this challenge of how do we deal with the fact that certain academic results, like you mentioned, may not be favorable? Because in academia, failure is always an option. Just we learn something new that is not, well, it does not work. So how can we bring this, these learnings of things that do not work in academia to industry to say, hey guys, there's no need to go down that path?
Yeah, I can take a stab on that. I think when it comes to research, whether it's in academia or in the industry, falsification is an important aspect, or we try to prove something wrong. And if we can't prove it wrong, temporarily we're going to take it as, that's fine. So in that sense, failures in academic research or even in the industry, I think would be very, very informative. That's going to spur more debates. For example, I wouldn't quite call it a failure per se, but sometimes we are looking for certain results, such as the concentration of pools that I was just mentioning, or we thought the DeFi system, the Web3 ecosystem, are going to be more inclusive and democratic, at least for financial transactions. But when you look into the distribution of miners' income, you look into the distribution of token holding wealth, on-chain wealth, you look into the transactions, we actually see slightly higher concentration than, for example, the numbers for the US real economy, right? So that wasn't something we intended to see, but we observed that, and that's informative. That tells us that the current design of the fee mechanism, for example, may not be optimal. Going back to that claim, right, the transactions are heavily concentrated at large players or large accounts. It makes sense because to execute a smart contract, it takes about the same gas whether I'm transferring $5 million versus just $5 to buy a cup of coffee. So if I'm a coffee drinker, transaction fee is a few 100%. But if I'm a big investor, this is cheaper than Swift, so this could be very helpful. And that leads to the concentration or the skewness. That's useful because we can then think about design. Can we maybe introduce second price auction? Can we introduce some other mechanisms that could help with the system? In fact, using the example of Ethereum, the London fork, the EIP 1559 change, these changes were not intended to deal with redistribution per se. It's more for mitigating the congestion and so on and so forth. But if you think about it from a monetary perspective, you can actually see that's actually redistribution. You're burning some fees collected from the big players and reducing the supply of tokens. That means all the token holders are benefiting. That's exactly a redistributive taxation in the system. So that wasn't intended, but that was actually helpful. So all these, I think, would eventually come together to play a role.
So let's dive in a little bit deeper into XRP Ledger. Walter, so looking at the XRP Ledger's current state and the roadmap, what do you think are the most pressing DeFi challenges ahead of us, and where is the room for the greatest collaboration between industry and academia?
I would say, for example, yesterday, we saw that Wasm VM will come into the XRP Ledger. I'm particularly excited about that because I'm more in the computer science side, and I see that that can bring a lot of developers, for example, from Rust, C++, etc., where compare when you focus only on having Solidity developers. So by bringing this ecosystem of developers who are already working on distributed systems, specifically, for example, Rust, they can bring and develop some new and exciting type of projects that at the same time open the doors for researchers, for us to compare and to see some new research questions. For example, one question that comes out of the top of my mind would be, right, in the XRP Ledger, you have the EVM sidechain that is operating with Solidity, and then you have Wasm VM. You can do, for example, a benchmark comparing both of them to see the performance of a smart contract. Well, that is different programming language, of course, running in two different EVMs. One is Wasm, and the other one is the Ethereum EVM, and compare the performance of both of them. While at the same time, another research question that I see that could be beneficial once you bring all these new developers is that, for example, how can you commercialize their development in terms that relates with AMMs? I don't know the exact response to that, but I think that's an interesting question that open up. And at the same time, when you bring all the things, all the features such as smart escrows and other features that I particularly have not seen in other chains, such as the native AMM, that's a very interesting feature because you are reducing things such as the payloads, and you're not you're interacting directly at the native protocol level. So that makes it to for example, think what's the benefit of that, how that compares with the other implementation in other places. So when you start trying to innovate and bring all these new things into the ledger, for me, that sounds very interesting for answering all these type of questions that start suddenly appearing. And at the same time, it benefits a lot of developers and the community that now they have more tools for things to develop. And then we as the researchers then can collaborate with the developers that are building their own products that at the same time might have some commercial applications.
Just to, if I may quickly add to that, I do think economic research is actually very useful, especially when it comes to understanding the type of digital assets or crypto assets we have, right? Are they all money-like? Are they trying to serve as a payment, a means of payment on the platform? Are they just tokenization of some digital collectibles? The digitization of underlying cash flow, because they have implications on the price dynamics of these digital assets and how we think about them. And when a network is trying to develop the token supply policy, that is essentially a form of monetary policy making. At the same time, we are using the tokens to manage the growth and the incentive provision within that ecosystem. That's very much corporate finance. And when there are all these digital assets, we have to think about their pricing. That's asset pricing. All these core finance or economic questions will come together to inform, right, how we think about the ecosystem. Another example is information. We move information across chains through, when we are trying to get interoperability or using smart contract to bet on tomorrow's weather, right? That's off-chain information being put on-chain. How do we do information aggregation? There's a huge literature in economics on peer prediction games. My co-authors and I have worked on the so-called Oracle trilemma, which is a harder trilemma than blockchain trilemma, because what we want to get is decentralization, scalability, and truthfulness. And truthfulness on-chain is fine, but when you're getting information from off-chain, you have to verify the authenticity of the information sources. And even with authentic information sources, you have to think about how to aggregate these signals with noises in order to provide very accurate or effective information. All these are wide open questions. I think that would require economists, computer scientists, data scientists to work together.
So, for the last leg of our discussion, since you touched upon hard problems, hard future problems, let's take an even more futuristic look how things are going to look. So, beyond the current challenges, what do you think beyond oracles, what are the emerging areas of academic research that excite you the most? And do you believe these areas can fundamentally change the DeFi ecosystem? Walter, let's start with yourself.
So before us, we have this the speaker who was presenting about agents and how they relate with the blockchain. Bringing that into DeFi, I would say one aspect would be MEV bots, so maximum extracted value bots. How that would look like if you build it using some agents. And the other aspect would be taking the whole agentic model, how, for example, you can build your own trading platform, and how you can build arbiters that can look at, for example, the prices being quoted in a DEX versus the prices being quoted in a centralized exchange, and take advantage of the arbitrage opportunities between both of them. So that's how I see, for example, at least bringing all this idea of AI currently with agents, how that can work directly within DeFi.
Yeah, I very much agree with Walter on that. We are in the age of generative AI, and there are two implications to that. One is we are going to see a lot of bots or generative AI agents playing a role in this economy. So it's going to be a lot of interactions between humans and bots and algorithms. And the second aspect, again, related to generative AI is we can essentially simulate the environment. Whether you are a trader trying to test your strategy, you're a developer trying to prove some robustness of your protocol, or a regulator who's trying to play with the sandbox. Generative AI does allow us to provide very good agent-based simulation. And Web3 is a perfect combination of testing ground for that, because many elements of that world model would be rule-based or protocol-based. And then you just need to use some deep learning or reinforcement learning to figure out some of the more discretionary behavior. Then you can pretty much simulate the environment, figure out how things are going to look like, how the participants of the market is going to react to that. I think that's very exciting. And sort of tying this to our earlier discussion, I still think understanding the trade-offs between centralization and decentralization is important. I'm an economist, so I don't believe in the extremes. I think what will eventually emerge and would work well is a combination of centralized elements and decentralized elements. For example, right now, the blockchain incentives that we provide are all static incentives, how we incentivize the good behavior within each round of block building. But in traditional finance, we have rating systems. We have reputation systems. We are all employees on contracts. These are dynamic incentives that we have barely touched upon in the Web3 world. Are there elements that can help us mitigate business cycles? Are there elements that can help us to provide better incentives? I think that's all wide open. So decentralization is not the end goal. There are trade-offs. Duplicating nodes are not free. So at the consensus layer, we talk about DAO, right? A governance layer, at the asset layer, at the information layer, what exactly are the trade-offs, and which one is decentralized now, and which ones are not very much decentralized. Can we think about alternative designs to bring it to be more inclusive and decentralized? I think those are all very interesting and exciting areas.
I think that's very exciting. So, in summary, I think the way we can bridge the gap, the way we can bring both worlds together is by extensive collaboration and working together on all of these hard problems. Fantastic.
Absolutely.
William, Walter, thank you very much.
Thank you for having
And
us
thank you
here.
everyone for listening.